Welcome to the stream. Sorry, I can't talk. I'm sick. Anybody trading this morning, this afternoon? Anybody? Any questions, comments? Let me show you my fails here. I was just long. Once I saw this green bar here, powerful. Then I started chopping a little bit, and then just start getting out here at this resistance points. Pretty straightforward, right? So I think so we might be going a little higher here. Might be retesting here, 745 area, 750 with this resistance point here. Any questions, comments, concerns? I mean, here on the 5-minute chart, you can see here, it looks like a double bottom, right? That's another reason to go long here. So I think it's going to pull back. Well, already did a little bit. I was going to start adding long here. Like I said, I think it's going to about 245 to 745, 750 area. Here we go. See. Oh, we almost got there because of this moving average. 744. Should have hit 745 here. There was another trade. Show the fills. Went short. Right below this green bar. Then I added again. Once I add, when I saw this double tails here. Just rejection of this moving average. Got out at the 20 here and 15. So that's pretty much it, I guess, for me. Got my loss back from Sunday. So look how it's coming back here already. Because this is pretty powerful move, so I wasn't expecting. Probably is going to reach 705. Who knows? We'll see what happens next here.
We really haven't seen any unwind from the Trump trades that are going to become, most in the crosshairs of higher or tighter immigration and higher tariffs. Obviously, China underperformed a lot last year, but I think a lot of that is just due to the fits and starts that China have had in terms of revitalizing their economy, and their economy continues to slow. So Chinese equities have fallen on the back of just the Chinese economy, not necessarily tighter tariffs. I think that those sectors that came under pressure in the mid part of 2018 and into 2019 are going to be hit hard, particularly as we come to the back half of this year. So I think there's going to be a little bit of a period of sort of optimism in the first half of this year. You're not going to see significant moves, I think, in tariffs right away. But I think as we start moving to the back half, middle into the back half of the year, that's when you're going to start to see some of these tariff names really come under pressure. And I'm positioning my portfolio now, no reason to be long them, going into a year where tariffs is going to be on the table as a hot topic for the Trump administration.
It's interesting. I guess that's what makes a market. A couple guests earlier in the program today saying, well, first half could be a little rocky, wobbly, or dicey. And then the second half is when things could be a little bit smoother. But I suppose we shall see. Aaron, it's good to talk to you as always. Thank you. That's Aaron Brown, PIMCO. Up next, we track the biggest movers into the close today. Christina Partsinevelos is standing by for us with that. Hi, Christina.
Why shares of one AI darling could fall 25%, and why crypto traders are excited about what you just talked about, Trump's return to office. I'll explain all of that after this short break.
So here on these charts, just showing the New York Open. So we completely erased. We erased this move up, which was, let's see, 725, 820, that's 100 points. Almost 200 points. About 175 points. So we took it out, right? Completely erased the move. So now, let's see what the 15-minute chart looks like. We got about 15 minutes left. So I kind of want to think. See, the problem is you don't want to think, but so it's showing signs of downward movement now. So I think I'm gonna roll over. Depends how this next 15 minutes is. Probably hit this 50-day moving average, which would be around 650 or so, or even lower. I mean, this would be a big bar, right? For 15-minute chart. If this goes all the way down. But you know, the last 15 minutes is pretty volatile, especially the last 10 minutes. So we'll see what happens here. But anything is possible here. But the problem is on a 5-minute chart. So this 20-day moving average is supporting this move down. So, and this move up took out this congestion here, this sideways move. So we need power to the downside and completely erase, especially this bar. Once we close below this one, more follow through to the downside might be seen here. But I would bet to the downside. But I'm done. But we'll see what happens here.
$15 out from the bell to Christina Partsinevelos once again for the stocks that she's watching. Tell us what you see.
Palantir shares, they're on track for their worst day since November, down roughly almost 5% right now. Morgan Stanley analysts argue that despite its early AI success, much of that upside is already priced into this stock. They're also saying the risk-reward ratio is skewed towards the downside. That's why they bet shares will fall to $60. It's at $76.25 right now. And meantime, Bitcoin is back above the $100,000 mark for the first time this year, 102. I should say. A few factors. First, the January effect where fresh capital gets injected to the market. We've seen that just in the past 2 days, business days. And then secondly, the upcoming inauguration of Donald Trump, who has promised to grow the crypto space, and the departure of SEC Chair Gary Gensler, who led a crackdown on cryptocurrencies. And that's why you're seeing Bitcoin up. Scott.
Oh, all right. Christina, thank you. Christina Partsinevelos. Still ahead, Wells Fargo and Citi moving higher today following the Fed's top bank regulator resigning. What that move might mean for the rest of that space coming up. We're back on the bell after the break.
So here we go. Like I said, I'll be betting to the downside, not at the to the upside. So we need to close below this tail here. We came down and we pulled back because we have a 200 rising here. So it makes sense. And this congestion here. So, but now here we go. I think see if we're gonna flush this really fast to the downside. We might see a lot of sell orders. I think we will. 5 seconds. Let's see what happens. No, up first.
Wealth management.
We are back as we show you shares of Fubo TV surging on news of a deal with Disney's Hulu Plus Live TV. Look at that stock. Unbelievable. For more on that story, don't miss a First on CNBC interview, by the way, with the CEO of Fubo TV. That's coming up in overtime. Just a short time from now. And up next, GE Vernova hitting an all-time high today. We'll tell you what's behind that big move inside the market zone next. We are now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. Plus, the Fed's top banking regulator is stepping down. Leslie Picker on what all that means for the industry. And Seema Modi on what's driving GE Vernova to all-time highs today. Michael, we've taken a little bit of steam out of the market here, but NASDAQ's leading the show today.
It is, and that's, still how this market plays defense against macro stress, against pressure from bond yields, and that has been the story. You'd probably, if you were bullish coming into this year, you'd want to see more than a one-day rally on Friday, being, kind of coming after how washed out the average stock was coming into the day. So, no grand conclusions except to say that yields at this level make the majority of the market uncomfortable. We're still on wait-and-see mode to see the trajectory of growth into the jobs report. I do find it interesting that NVIDIA gets this big, kind of almost forced mechanical bid as new index money comes into the market. We'll see if it comes through after CES and if it's more than just, let's find the stocks that haven't moved much yet on the familiar themes.
Jonathan Krinsky, BTIG, the technician over there watching all this action like you are, says, nice rally, but not a game changer yet. It's oversold bounce, but you're getting into some resistance.
Exactly. And so I think pretty much everybody who looks at the whole chart structure says 6,100, which is basically the all-time highs from early December. It looks like it might, on the first revisit of it, be a bit of a tough ceiling to crack through. That's just because it seemed like this culmination point. I don't think that we're really moving that dramatically on headlines, but it doesn't help when you have the equity futures get a little bit of a quick boost off of this headline that we might have a moderate tariff approach. President-elect Trump comes out and kind of contradicts it, and it's kind of like, oh, here we are again, where we have to actually surf the headlines and worry about the kind of unwelcome policy moves coming before the stuff that we're wanting to price in.
Yeah, have to play this game again. Leslie Picker is following news of the banking industry's top regulator stepping down, right, Les?
Yeah, so Scott, bank stocks gaining earlier on this news that Michael Barr would soon step down from his post as vice chair of supervision, although these names are kind of losing steam with the broader markets later in today's session. While some had speculated that President-elect Trump would seek to fire Barr, his resignation was unexpected. The new Basel III capital rules were the brainchild of Barr and faced fierce pushback from the industry and beyond. Stifel saying in a note today that the news means that the Basel III endgame proposal is, quote, dead. The firm's chief Washington strategist, Brian Gardner, wrote that Barr's replacement, which he believes will be Fed Governor Michelle Bowman, may propose new capital rules, but they would likely be neutral. Bowman voted against the Basel III proposal. Additional upside for the industry may include quicker M&A process and more favorable maximum debit interchange fees, Stifel says. Scott.
Leslie, thank you. That is Leslie Picker. Seema, tell us about GE Vernova today.
Well, Scott, Microsoft's promised to invest about $80 billion in data centers this year. That's fueling shares of GE Vernova, which has become this key supplier of gas power and operator of smart grids. It's seen in the industry as an important partner in the build out of data centers, which require a whole lot of power. It's the main reason GE Vernova has been accelerating its timeline to increase gas turbine orders and capacity overall, a key topic at the company's investor day in December. GE Vernova currently forecasting about 23 gigawatts of new orders in the next 3 years, which Wells Fargo analysts call, quote, conservative. Shares at a new high today, trading, though, in line with Wall Street's average price target of $370. Scott.
All right, good stuff. Seema, thank you. That's Seema Modi. Michael, I'm looking at NVIDIA here as we approach the close today because 148.88. Above that would be a new record closing high. We are at 149, so we are right there. A handful of hours before Jensen Huang gives his keynote at CES in Las Vegas, which has been a stock-moving event.
It has, and try a little bit of front running. It's interesting. I mean, you've had dozens of new record highs in the S&P 500 since NVIDIA decisively went up into the 140s. Actually, it cracked above 140 in June of last year. So the big question is, did the market lose its ability to keep rallying on basically the same observations and the same news about the AI investment story? Or, is this just kind of letting fundamentals catch up to the valuation? Valuation itself in NVIDIA terms doesn't look super demanding anymore. It's like in the mid-30s forward multiple, not that different from Microsoft and Apple. So it'll be interesting. I think that's a test of the market's willingness, to believe that there really is an aggressive new uptrend here.
We'll see if it gets that record closing high. It's still above that level. It hasn't closed above 150, by the way, since November. So it looks to be right there as well. That does it for us. We'll see you tomorrow in the OT with Morgan and John.
That's the end of regulation. Eagle Point Credit Company ringing the closing bell at the New York Stock Exchange. Yushin Technology doing the honors at the NASDAQ. NVIDIA potentially closing at a record, and Bitcoin leaping back above 100K to start this week as tech takes the driver's seat. Well, that's the scorecard on Wall Street. The action is just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan with John Ford.
We have got a big show coming your way. In just a moment, the CEO of Fubo TV joins us in a first on CNBC interview as that stock more than triples today on news of a deal with Disney to reshape the streaming live TV market.
Plus, AI stocks getting a bid as OpenAI's Sam Altman lays out a future where AI agents join the workforce and boost productivity. We're going to talk to former Cisco CEO turned venture capitalist John Chambers about the potential AI-driven gains that are coming for investors. But first, let's break down today's market action with Samir Samana of Wells Fargo Investment Institute and Christina Cooper of Invesco. It's great to have you both here. Basically a mixed session to start this first full week of the new year. But Christina, I'm going to start with you because we did have the S&P finish up about 0.5% here. The NASDAQ more than 1%. I know NVIDIA's been flirting with a record close ahead of that CES keynote too. What are you watching in this new year, especially after such a strong 2024?
Well, I'm watching to make sure that the factors that made 2024 successful are still in place. And we certainly have some of those factors. We have supportive central banks that are likely to continue easing. We certainly have the potential for improvement in earnings because I think we will see a reacceleration in the economy. But we do have to worry about the risks. The risks to me are twofold. One is the potential for the economy to falter. We've seen some small cracks form, but those could worsen. I mean, let's face it, monetary policy tightening was very aggressive. We never really did see a significant impact. Are we going to avoid it? Probably. But I think there is that small chance that it's just late to come and that we could see greater cracks form this year. The other issue, of course, is the potential for a resurgence in inflation and what that can do in terms of changing monetary policy, which is part of what has made this environment so supportive for risk assets.
And certainly it's something to watch, Samir, as we have seen the 10-year Treasury yields flirting with key technical levels and highs of last year. Want to get your thoughts on the setup here for 2025, especially after a failed Santa Claus rally. And I realize you can argue how much stock to put into that after the strong gains of last year, but also given the fact that it really has been in many ways the U.S. versus everything else, whether that's a trade that continues.
Sure. So I would say at a high level, look, we do think there's more room to run. Our year-end target is 6,600 for the S&P. So that's about, 11, 12%, total return, especially given kind of today's modest session. So I do think there are more gains. Now, that being said, with the 10-year having crept up here to kind of 4.5, 4.6%, the gains from here probably come by a little bit, more in a more difficult way, right? You're probably going to see a little bit more chop. Today showed you that, especially with rates up here, you're going to have very narrow leadership. You had small caps, a lot of the rate sensitives have a very difficult day. You had China down yet again, right? So for everybody hoping that there's going to be some additional, source of, kind of stimulus from the Chinese, they're still kind of going it very slow. So I think you do lean into, some of these trades that have been in place for some time, because I think that's where the earnings growth is.
Not such a tough day for NVIDIA, though. It does close 149.43, I believe, above that 148.88 level. That would have been a record level. So, Christina, that makes me wonder. NVIDIA was the big name last year, and mega caps really led things. Should investors be looking outside of those big domestic stocks for growth, for diversification in 2025, and then particularly internationally? How would you do that?
So absolutely, they should be looking outside the mega caps because you want to diversify even just in valuation terms. And there are far more attractive valuations if you look in the small and mid cap space. I also think they're likely to benefit the most if we do see that economic reacceleration. They're more sensitive to the economy. We could also see the same come from cyclicals, which also, by the way, are lower valuations. Now, when you go outside the U.S., I think there's certainly a lot of potential there. And you just have to keep in mind that the economy doesn't have to look great for markets to look attractive. And so, for example, the UK, to me, stock market looks very attractive right now. Valuations are low. Dividend yield is high. Buyback yield is high. That's an environment where we could see some strong individual players, especially those with more global exposure, do very well. So I think it's about being actively managed to a certain extent outside the U.S. Be selective. There are a lot of opportunities.
Samir, how are you thinking about bonds and fixed income in 2025, both in how they affect stocks, certainly smaller cap stocks, but then also to what degree do they belong in investor portfolios? Sort of what's the new rule of thumb for how those get treated?
Yeah, I mean, look, I think with rates up here, at multi-year, if not, multi-decade highs, I think you've got to have full allocations to fixed income. Now, that doesn't mean you need to get out over your skis with respect to duration. Right now, we're more neutral. We like kind of the middle part of the curve. We think you can pick up quite a bit of the yield without that additional duration risk that the very long end, it poses. So, yeah, I think it's a great ballast if some of these things don't quite pan out the way people anticipate, but then I think it's also worth kind of noting that look, with rates up here, it still makes the U.S. more attractive on a relative basis because of those rate differentials. We think the dollar has kind of an upward bias to it, so we think the U.S. continues to outperform emerging markets. Developed might be kind of in between the two. From a sector standpoint, what that means is you want to be what we've been calling anything but defensives, right? So communication services, energy, financials, industrials are the areas that we like, and we're avoiding utilities and staples. Those face a lot of headwinds, both from commodity prices and higher interest rates. But I guess from our standpoint, there's a lot of compelling opportunities. You just have to be a little bit careful as to how much mean reversion you expect this year. I think this year, at least the first half, could look a lot like last year.
Okay. Samir Samana and Christina Hooper, thank you both for kicking off the hour with us, with the Dow finishing basically flat, down fractionally, but the S&P up 0.5%, the Nasdaq up more than 1%. Let's bring in Mike Santoli now for a look at three key parts of the market that are trading at inflection points. Mike.
Yeah, outside of equities, Morgan, you have a lot of these threats of escaping a long-standing trading range or maybe having already done so. Here's the 10-year Treasury yield you're just alluding to. We're above 4.6%. It approximates where we got a few months ago here. Now, I don't think the absolute level is some kind of magic tripwire. If you remember back in late 2022, it was actually 4%. Felt like it was kryptonite for the equity market. That's where you finally got your bear market low. We got to 4 or 6, above almost 5% in the spring. And that was, just associated with a fairly routine equity pullback. The issue is the cyclical parts of this market are acting as if they're having a hard time believing the economy and the housing market can withstand rates much higher than this, even though credit markets remain very strong. This is a level where, on paper, it should attract some bond buyers. Real yields are very generous right now. Here's the dollar. The dollar index has broken out above this 2-year range ceiling, although we did get much higher than that when the inflation was raging and the Fed was going to have to really ramp rates. So keep an eye on that. We've curled lower. Maybe we'll get some relief on that front. Finally, oil. Very bearish positioning among hedge funds and others coming into this year, so nobody expecting it to do much. You see this nice little pop right here, but it puts it in perspective. This is still kind of a downtrend, and you're in there until you get up into the mid-70s. So far, nothing in absolute terms to worry about right here, even though there has been a pretty sharp lift along with natural gas, Morgan.
So we've been having these conversations, Mike, about concerns and fears of the reigniting of inflation. We heard it from Governor Kugler on the show on Friday and some Fed speak in general in recent days about this on one side of the equation. And on the other, the possibility of stronger economic growth as well. In terms of these charts that you just showed and technical levels, what are the key catalysts that could drive testing of those levels? Is it really those two buckets, or is there a third dynamic or factor that could be at play as well?
Certainly, I think those are the two main ones. The growth differential between the U.S. and expected growth levels around the world is really what seems to be at work with the dollar. Policies here maybe going to actually push in that direction. The moving yields in Treasury yields does not mostly seem to be a repricing of inflation expectations. Yes, inflation expectations, according to market-based measures, are up from where they were in September, but that doesn't seem to be the incremental driver higher. It's much more the real yield level, the term premium, whatever you want to call this kind of catch-all factor that's in there that maybe is just demanding more compensation for holding government debt, or it's about thinking we're at a sort of generally higher nominal growth economy. So it's all those things mixed into one. I would just say, I don't think oil, commodities, goods really have what it takes right now to drive another big burst higher in inflation. I think it's much more just being sticky at these levels that is supporting things like yields in the dollar.
All right, Mike, thank you. We'll see you in just a bit. Well, Fubo having its best day ever, surging 250% after announcing a combination with Disney's Hulu Plus live TV business, creating the second biggest internet pay TV company in North America behind only YouTube TV. Hulu's subscription service with its catalog of on-demand shows and originals is not part of the deal, but one big part of the agreement is that Fubo is dropping its lawsuit against Venue, the sports streamer planned by Disney, Fox, and Warner Brothers Discovery. Joining us now is David Gandler, Fubo co-founder and CEO. He's going to continue to lead the newly combined company. David, good to see you. So when you and I last
thank you for having me.
Great to have you back. When we last spoke back in August, you were suing Disney and its partners over Venue, saying it was anti-competitive, deprived consumers of choice. Now under this deal, Disney is beefing up Fubo, becoming a majority owner in the company you'll be running. So how does this fix those issues?
Well, I think the combined company, first of all, will have about 6.2 million customers. And as you said, it will be the second largest virtual MVPD in the space. And for me, that's an important moment because it significantly intensifies the competition in the space. And we'll be able to, negotiate deals together, get better pricing, more packaging flexibility, and that ultimately helps consumers. And, as part of our deal, we've amended our carriage agreements, which allow us to launch skinnier bundles to attract customers that are more price sensitive and looking for greater value.
And what will the capital being injected into this venture do for you?
So, as you know, we've gone from being an upstart, should this deal go through, as part of the signing, we've had a cash injection of about $220 million and a term loan of $145 million. So that gives us significant capital to continue, to march towards our growth plan. And I think together, we'll be able to really focus on three areas. One is sort of the content cost, advertising optimization, there's marketing efficiencies, and, we'll look to leverage, Disney's resources and support, to help us grow our business and compete vigorously in space.
David, it's Morgan. It's great to have you on the heels of this news. As John just mentioned, your stock finishing up 250%. It just surged. Investors are certainly wrapping their arms around this and seem to be very excited. But I am curious, if we take a step back, how did this deal actually come together?
I get this question a lot. Look, as I've always said, our goal has always been to provide value for all of the stakeholders in our industry. And we've said that was for shareholders, for our media partners, and obviously for our customers. And, we initiated, I personally initiated, I thought it was a good idea. I think that, given where Hulu Live is and, what Disney was doing with it, I think it made a lot of sense. And, the key, I think, for the industry right now is to look for ways to continue to monetize programming. And I think this is, again, it's an important deal. It certainly changes the landscape. It's more competitive. And the big winner today, I think, is the consumer.
How does it speak to how quickly the media landscape is changing and evolving here right now, especially as you start to see things like, we're even experiencing it. Comcast, our mother, our parent company with SpinCo. You're seeing it with other deals happening among more traditional media companies as well. But even just tonight, you have Netflix broadcasting its first WWE Raw episode as well. So how does it speak to what we're seeing in terms of cord cutting, in terms of cord nevers, and in terms of this TV 2.0, I'll call it, landscape?
Yeah, look, I think you're right. I mean, it's a very complicated space. The dynamics are quickly changing. Everyone's looking to try and reposition themselves for success to be able to attract more customers. We've been very focused on super aggregation. It's an area that I've talked about several times now over the last year. You know, we want to be able to provide consumers with different price point video services along the demand curve. And we want to provide them that flexibility. And I think everyone, including Netflix, is looking for ways to ensure that they remain at the top. You know, as it relates to Disney and our relationship, I think that, you know, what we're able to do right now is to offer two very distinct brands. One is Hulu, which will provide a more fulsome entertainment cable replacement service, which obviously has sports, news, and entertainment. Fubo will continue to double down on its sports offering. And now with these amended carriage agreements, we'll also be able to afford consumers, you know, skinnier sports bundles. So we're very excited about this. I think you'll continue to see significant competition. But what you learned today and what we were able to secure today, I think, is really important as it relates to consumer choice, affordability, and value.
David Gandler, Fubo CEO, thanks for joining us.
Thank you so much for having me.
Well, we have some breaking news on Ulta Beauty, and Courtney Reagan has the details. Hey, Court.
Hi, Morgan. So Ulta Beauty announcing a CEO transition effective right now, right here today. So Ulta CEO Dave Kimball is effectively stepping down from his position today. Will stay on with the company through the end of June. The current COO and president, Keisha Steelman, will take over as CEO of Ulta Beauty effective today. She has been with the company since 2014, held a variety of roles, so very familiar, of course, with how the company is going. And another thing that we should note is within this same release, the company is giving a fourth quarter update. The fourth quarter full results won't be out until March, but they are saying that they are increasing the fourth quarter outlook because of the better than expected performance during the holiday season. Comparable sales increasing modestly. That's the expectation now. Operating margin to be above the high end of the company's previous expected range of 11.6 to 12.4%. So shares here of Ulta Beauty are jumping about 3% on perhaps both the update and maybe also the announcement of the new CEO, the current COO. Again, Keisha Steelman is stepping in. Morgan?
All right. Courtney Reagan, thank you. I think it's all those tween girls like my 8-year-old asking for skincare on their Christmas list. Quote unquote, a pathetic and craven cave to special interests. That's what former Council of Economic Advisors Chair Jason Furman is calling President Biden's move to block Nippon Steel's takeover of U.S. Steel. He's going to explain why next.
Plus, are tariff risks easing? We will talk about a new report saying President-elect Trump's universal tariff plan could be scaled back and what that means for investors.
And more deal news just crossing. Medical device maker Stryker making it official, saying it's acquiring Inari Medical for $80 per share in cash. You can see shares of both companies up right now. Overtime is back in 2.
now.
We've got breaking news on Meta. Julia Borston has details. Julia?
Mark Zuckerberg announcing 3 new appointees to Meta's board of directors. Dana White, president and CEO of UFC. Zuckerberg saying he's admired him as an entrepreneur and brand builder. John Elkann, the CEO of Exor and the chairman of 2 of its portfolio companies, Stellantis and Ferrari, noting that he brings an international perspective to Meta's board. And also Charlie Songhurst, a tech investor who previously led strategy teams at Microsoft and joined the Meta advisory group last year to advise on AI and technology roadmaps, now officially joining the board. Zuckerberg saying that 2025 will be a big year for Meta, and he's excited to have these new board members. John?
I would expect he would plan for it to be a big year, Julia. Thank you. While investor uncertainty about Donald Trump's proposed universal tariffs might be easing a bit today after a new report from the Washington Post said the tariffs would be universal in that they would be applied to every country, but they may only focus on certain sectors critical to national economic security. But President-elect Trump shot down the report in a Truth Social post, saying the story incorrectly states that my tariff policy will be pared back. It's just another example of fake news. Well, joining us now is Jason Furman. He is the former chair of the Council of Economic Advisors. Jason, how are you factoring the effect of tariffs into your outlook for the U.S. economy this year when we don't know to what extent there might be tariffs, where they might hit?
Look, if Donald Trump is right, he has a set of tariffs that would be awful. If the Washington Post is right, he'd have a set of tariffs that were merely bad. Either way, this just isn't what we want to see at this point in the economy.
But how much does it matter to how the economy actually does in 2025? People disagree about the extent to which tariffs, depending on the goods, depending on where they're, the extent to which they're made domestically, would actually affect the economy. Can you sort of lay out how you're thinking about where they might hit that would be particularly bad and where it might matter less?
Yeah. So first of all, there's inflation. That's gotten a lot of attention, but it's probably not a huge impact on inflation. But even a few tenths on the inflation rate could be the difference between the Fed being able to cut rates and it having to hold off or even partially reverse. The bigger issue is that with tariffs, you get less imports and you get a stronger dollar. And so as a result, you get less exports. That's bad both for consumers and jobs. And finally, according to the Washington Post report, even these limited tariffs would include tariffs on things like steel. That would actually hurt manufacturing because we have many more workers that work in industries that use steel. It'll make those industries like the auto industry less competitive, have a harder time globally. And so it wouldn't help manufacturing, it would actually hurt.
I'm glad you brought up steel because we do already have tariffs on steel and quite a few different aspects of steel and steel products in this country. And one of the things it's actually done over the past however many years has reignited a domestic steel industry and has actually raised the prices of domestic steel and some of those steel products higher than other parts of the world, which in turn helped spur Nippon Steel's takeover of, or attempted takeover, I should say, of U.S. steel. So I was surprised to see your comments. You were very blunt on X last week about the fact that that deal was being dashed by President Biden, and wanted to get your take on why his move was the wrong one.
Yeah, look, U.S. Steel is just not a competitive, highly viable enterprise right now. They got this enormous gift of a large investment from a foreign company that was committed to continue to make steel in the United States. That would be good for our economy. It would be good for our national security. Japan's a really important partner. But most importantly, we have rule of law in this country. And the law says that you have a narrow set of national security considerations. CFIUS, which assesses these things on behalf of the president, did not seem to think this was a national security risk. And so to me, this really looked like an abuse of the law, a very arbitrary thing. When other countries do stuff like this, we object. We shouldn't be doing it ourselves.
Yeah, and it speaks to geopolitical dynamics, too, since Japan is a key strategic ally of the U.S. and is one of the top investors in businesses here in the U.S. So how does this speak to how you're thinking about the U.S. economy in 2025 and beyond where fiscal policy is concerned, where monetary policy is concerned, given this geopolitical backdrop?
Yeah, look, I mean, the president has a long list of things that he wants to do that would raise the budget deficit. Extending tax cuts is trillions of dollars, lots of new tax cuts. On the other side of the ledger, he has tariffs, which are a harmful way to raise revenue. And then he has this commission, which I'm skeptical will generate real budget savings. The backdrop against this is the 10-year Treasury is above 4.5%. It's risen since the Fed started its cutting cycle. It's rising, not because of what the Fed is doing, but because of what investors think about the budget deficit, about inflation. And at some point, I think the Trump administration is going to need to pay attention to that and figure out how to error correct on these big deficit plans.
Jason Furman, thank you for joining us.
Thanks for having me.
Speaking of the blocked deal, U.S. Steel and Nippon Steel filed separate lawsuits against the Biden administration, Cleveland-Cliffs, and the United Steelworkers, accusing them of interference in the deal. Cleveland-Cliffs hit back at the lawsuit in a statement earlier today, saying in part, quote, "Today's lawsuits against the U.S. government, the USW, and Cleveland-Cliffs represent a shameless effort to scapegoat others for U.S. Steel's and Nippon Steel's self-inflicted disaster. Now that it is clear that they have miserably failed the very shareholders they always say they work for, they are lashing out with petulance as a result." The United Steelworkers telling CNBC, quote, "By blocking Nippon Steel's attempt to acquire U.S. Steel, the Biden administration protected vital U.S. interests, safeguarded our national security, and helped preserve a domestic steel industry that underpins our country's critical supply chains. We are reviewing the complaint and will vigorously defend against these baseless allegations." So, John, this story continues to unfold in real time, and we are not anywhere near the end.
We'll see what happens in court. Well, are massive corporate AI investments about to pay off? OpenAI's Sam Altman says 2025 could be the year that artificial intelligence agents join the workforce. We'll talk to former Cisco CEO and venture capitalist John Chambers about where the biggest opportunities lie. We'll be right back.
Over the holidays, I've also had a chance to reflect and have had long talks with my family about our future. Throughout the course of my career, any success I have personally achieved has been because of their support and with their encouragement. So last night over dinner, I told my kids about the decision that I'm sharing with you today. I intend to resign as party leader, as Prime Minister, after the party selects its next leader through a robust, nationwide, competitive process. Last night, I asked the President of the Liberal Party to begin that process. This country deserves a real choice in the next election, and it has become clear to me that if I'm having to fight internal battles, I cannot be the best option in that election.
'90s, except it's going to move at a dramatically different speed. My view is 5 times the speed and 3 times the output or the economic benefit from it. So having been on stage with the president of the U.S. in the 1990s talking about the role the internet would have in our economy and having watched it build that decade of productivity, I think it's very similar to what we see today. You see a president that's focused on how the economy is going to be driven by technology. How do you get efficiencies into the system? You now see CEOs, when they go to Davos here very shortly, they're going to be focused on how do they take AI and bring it to economic outputs and results. And I think those companies that move rapidly here are going to break away. Those that do not will get disrupted and left behind. That will be true of startups, but also very large companies. So I think it's a very similar playbook, just at a faster speed and much higher, much more positive outcomes than even what we saw with the internet. Productivity, think it would mean 5 to 7% a year in terms of productivity growth for a company's earnings. Go ahead, John. I apologize.
No, fine. Shifting a bit, I know you're a lot more focused on these use cases for AI versus, say, quantum computing. Every few years, certain companies that have invested in quantum research try to make the argument that this time commercial uses for quantum are right around the corner. You're very well versed in security as a business where quantum threatens to break encryption. How would you know when it really is starting to be quantum's time and when that would be something you're more interested in investing in?
All right, well, let me break it into 2 questions, if I could, John. First of all, quantum will be a major force in the future. As you articulated very well, normally people get excited about it, then lose interest, get excited, lose interest, and about the time they give up on it, it comes back, and you've seen that in some of the quantum stocks. Where you hit that is actually my sweet spot is I have 8 major startups in security at the present time. that field, I think, has positioned itself to grow very rapidly this next year. People have not been investing in it as much. My average security company is growing at 40% year over year. And using AI to move as an example, John, to the questions earlier, one of them, if I were to use an example your viewers would get, would be a Safe Securities, where they developed their products in a month now and then take it to market and became the leader in risk management measurements and implementation. They've grown their business 2 years in a row at 100% growth. And you talk about productivity, they've increased their headcount by 0%. Now, quantum will be one of the ways that will put pressure on, if you will, security, but also AI will be one of the ways we deal with these technologies and address it. So I'm optimistic about quantum, but I'm much more interested in the short term in terms of security. And I think we've dramatically underinvested as a country on this category. And that's where I'm putting a fair amount of bets. All my bets are AI and cybersecurity.
All right. We will watch that as well. John Chambers, thank you. Good to see you.
John, it's a pleasure again. Morgan, thank you all.
Well, now it's time for a CNBC News update with Seema Modi. Seema.
John, the U.S. cyber watchdog announcing today it found no indication that other federal agencies were affected in a breach at the U.S. Treasury. Now, the Treasury Department reported late last month Chinese hackers breached a highly sensitive office that handles economic sanctions against countries. A federal judge today finding that Rudy Giuliani in contempt of court for delays in turning over assets to comply with $148 million defamation case against him by 2 Georgia election workers. Giuliani testified today that he sometimes didn't turn over everything because requests were either too broad or a trap set by plaintiffs' lawyers. And McDonald's is the latest company to roll back its diversity practices, joining companies including Walmart and John Deere. The fast food chain said today that while it's ending goals to achieve diversity within its senior leadership and for its suppliers, it remains committed to diversity and believes it keeps the company competitive. John and Morgan.
Seema, thank you. Well, NVIDIA closing at a record and Bitcoin surging to start the week. But could there be signs of a double bubble forming in those assets? We're going to look at what history has to say next. Welcome back to Overtime. NVIDIA notched a record close today. Bitcoin hit December highs. So what are these moves? Tell us about the current risk appetite. Let's ask Mike Santoli. Mike?
Yeah, Joe, well, for a certain type of asset with, kind of open-ended potential growth and maybe a world-changing kind of future embedded in it, it looks like risk appetite's pretty high. I tracked this for a while. This goes back a year and a half to the middle of 2023. NVIDIA and Bitcoin moving very much in sync. Then they diverged. This was after the Bitcoin ETFs were introduced. It was consolidating those gains and then was held in check right up until before the U.S. election. Caught up to NVIDIA. Now they're back in sync again. Of course, it doesn't mean that they're always going to stay this way, but they feed off, I think, of a very similar stream of investor energy, I guess, is the way I would put it, where it's a little bit less valuation sensitive and more about let me just buy a piece of the future. Now, take a look at a longer-term view comparing those two assets along with very, very widely acknowledged sort of bubble prices of past eras. This would be NVIDIA over the last few years, Bitcoin, of course, Cisco, which peaked in 2000. These are lined up to their peaks, and RCA, Radio Corporation of America, in the 1920s. You see a lot of synchronicity. This is from Yuri and Timmer over at Fidelity. Not really saying that the NVIDIA and Bitcoin are similarly vulnerable bubbles, because especially with NVIDIA, the earnings have grown just stupendously, especially even relative to what Cisco did in the 90s. Cisco earnings were only up like 4x over the second half of the 90s, and the stock was up many multiples of that. You also see starting to diverge to the upside, but keep in mind that there's certain rhythms to these parabolic moves, and if they don't cool off for a while, they do become a little bit more fragile as hot money keeps piling on top of each other, Morgan.
All right, we'll continue to watch it. Mike Santoli, thank you. The Consumer Electronics Show kicking off this week. Up next, speaking of NVIDIA, we will tell you about the big consumer tech trends and companies that you need to keep an eye on right now.